Hi everybody, I wanted to go over our discussion question in terms of computing the financial ratios for one of the fashion companies. And I picked one company where I like to shop sometimes, Urban Outfitters, very nice place. Um, and apparently a nice place to work at as well from the list of the 25 top selected companies to work for by fashion professionals. So what I wanted to go over is basically, first of all, with the ratios, the first thing we need to do is basically go to the website. This is urban.com in the investor relations tab. And what you need to do is find the annual report. So how did I find their annual report? You go to, for example, annual filing for 2016, and this is what comes up, and I basically saved the 10K. Look for the 10K basically. That's the big annual report that you're going to need. And then for ratios, basically, since you're going to need, you may actually not need the prior year's report for this. Let's see if we can just do it with one report because I was able to do it. So this is basically the report that I got, Urban Outfitters. Don't be intimidated when you do see it and it looks so big and it looks very formal. Go to the table of contents and click on financial statements. And then go a few pages down. It's not, it's not, you will be able to find it. And this is where you get the balance sheet. This is what we want. And now for ratios, since return on investment is basically average assets, so what you need to do is you need to grab the 2016 asset number. This is 1.8 billion. And the 2015 number, total assets by 1.9 billion. So I bring them over here just so I could get the average assets. And then where do I get net income? Note, also note this is in thousands. Don't let this confuse yourself too much. All you have to do is, this says 1.8 million. It's really 1.8 billion. They just do this so they don't have too many numbers on this here. Now, for statement of income, if you want to get your income, it will basically show here net income. And for 2016, 224. It says thousands. It's add another 30. It's actually 224 million. So that's how I got the ratio. Return on investment is net income divided by average total assets. And then equity is similar situation. Grab the equity, which is actually shown right here for both years. I have here 1.1 billion, 1.3 billion for an average of 1.2 billion, and same net income, and return on equity is 18.2%. Not too bad, right? For 1 year worth of work. For current ratio, current assets divided by current liabilities, you actually have the current assets on the balance sheet right here, 834 million, and current liabilities is 329 million. So they have 2.5 times the current assets and liabilities. So that should make you feel safe that Urban Outfitters can pay their bills on time. So just wanted to give you guys an example of how to compute this. And also, I will post this as well, but it's basically a free report I got on the outlook of the company. In terms of growth, it doesn't have to be complicated. Basically, we're seeing here that this company is very much recommended because of their recent revenue growth of about 7%. So the idea is the reason Urban Outfitters is going to grow is simply because its revenue is growing. And it's because their product is selling more, they're implementing more brands in stores such as Adidas and Puma, and their own products are doing well in the market, and they're poised to grow in the coming year based on this strategy of delivering great product and increasing partnerships with other fashion companies. and they're outpacing the industry. And essentially, that is why their strategy is working.